Yields on UK and US government bonds are at their lowest in generations. Is this a sign that they're in the grip of one of the biggest asset bubbles of all time? Or is this actually quite a rational reaction to economic fundamentals? My name is Justin Pugsley, and I handle media relations at the New Normal Advisors. I'm here to talk with Paul Hodges, Chairman of the New Normal Advisors, about this important topic. Paul, low yields on UK and US government bonds, surely it's all down to ultra-low interest rates and quantitative easing. As soon as economic growth resumes, surely yields will shoot back up again.
I'd actually take issue with your point, Justin. If you look back over history, say take the last 100 years, which is perfectly possible with UK and US government bonds, what you see is we've actually reverted to the mean. That the past 25 years of yields above 10% was quite extraordinary. If you go back through history, yields of about 2 to 2.5% have been absolutely common, and that's really where we've come back to today.
Okay, Paul, so we are in an economic environment that does favour bond markets, but surely quantitative easing, which could lead to inflation, huge budget deficits, which seem to have little prospect of being paid down. Will all this not spook the markets at some point?
I think there's very little risk of inflation. The markets, I think, and the policymakers have got this one completely the wrong way round. What you've got is an ageing population, 29% of the Western world now, 272 million, over 55. What these people are doing is quite rational. They are saving, they're not spending. So they have an extra decade or more of life expectancy compared to previous generations. They haven't got the pensions to support this, so they have to save more and they have to spend less. Therefore, we're going to have, I'm afraid, much lower growth and also much higher levels of saving with safe government bonds.
Japan is often an example of what you're discussing. Is it not an erroneous one because Japan's bond market is mainly domestically owned and also they made lots of policy errors?
Well, I'm afraid the policy errors that Japan made of quantitative easing, massive stimulus programs and so on are the same policy errors that we're making here. What Japan has realised, much belatedly, 20 years later, as the governor of the Bank of Japan, Shirakawa-san, has recently said, is that this is all about the demographics. And the demographics changed in Japan 10 to 15 years ahead of the West, and we're seeing the same patterns play out. It's not true to say, really, that Japan is different. Japan is just simply leading the way for where our demographically driven demand for bonds is going.
So we're in an environment where bond yields in the UK and the US, on government debt at least, is like to stay low for a long time. So it's not really about yield anymore, it's about safety. Is that correct?
Exactly. I mean, and the problem is that because policymakers keep making these same mistakes as they've made in Japan until fairly recently, what we're seeing is risk rising in all these countries. So I agree with you that putting in quantitative easing, building up massive debt for the future, is putting an enormous brake on future growth. And there will come a tipping point for every economy, just as we've seen it with Greece and with Spain. If we carry on doing the wrong thing as long as possible, then we're going to end up with a very bad end result.
So in summary, UK and US government bonds are actually an asset class favoured by the shifting demographics, as they're typically the type of asset favoured by investors who are near retirement or are in retirement. And thank you for watching this short video. If you'd like to know any more information about how these issues can affect your business and your investments, please visit our website at www.new-normal.com.